Welcome to the deep dive. You know how this works. We gather a whole bunch of sources and then pull out the most interesting parts. Today, we're diving into the financials of ICICI Prudential Life Insurance.
Sounds good.
We've got their 9-month performance report, the one ending December 31st, 2024. And we've also got a brand new investor presentation, hot off the presses.
Awesome. We're going to be looking at their profit growth, see how they're doing with getting new business and how they're managing risk in this crazy economy.
Yeah.
We'll even touch on some of their new product launches and why those matter to you.
Okay, so their profit after tax is up by a pretty hefty 18.3% in these last 9 months.
Yeah.
It sounds great on the surface, but what does it really tell us about how healthy they are financially?
Well, it definitely seems like they're doing something right, but you're right. Profit alone doesn't tell the whole story.
Right.
We need to zoom out a little.
Yeah.
Their total premium income grew by almost 15%, a solid 14.4%.
Okay.
Hitting $321 billion. That's huge.
Wow.
This means their core business is doing really well. And it's not just investment returns making their profits look good.
Interesting. But then I noticed that their total investment income actually went down.
Yeah.
Shouldn't that be increasing along with their profits?
This is where it gets interesting. The decrease is mainly because of the market going up and down and how that affects their unit-linked investments.
Okay.
But get this, their income from other sources actually went up, mainly from interest and dividends. It really shows that even a huge insurance company needs to spread its investments around, just like we do with our own portfolios.
Makes sense. Diversification is key. Got it.
It is.
Now let's move on to new business. Their annual premium equivalent, or APE, is up by a massive 27.2%.
Yeah.
That's got to be a sign of some serious growth, right?
Oh, yeah, it totally is.
Yeah.
And when we look a bit closer, we can see that this growth isn't happening evenly across the board.
Okay.
They've had a huge jump in their annuity business, with APE up by a crazy 81.7%. It seems like people are really starting to prioritize that guaranteed retirement income, especially with all the market ups and downs
All right.
and worries about running out of money later in life.
Yeah. So it sounds like people are really thinking about how to make sure they have enough money in retirement. Should I be looking into annuities too?
That's a great question, and it's one a lot of people are asking themselves right now.
Yeah.
It's definitely something you should talk to your financial advisor about.
Okay.
But annuities can be a really useful tool,
Yeah.
especially if you want that steady stream of income when you retire.
Yup. Noted. Now let's talk about their products and how they're getting them to customers. The report mentions a diverse product mix and lots of different distribution channels. What does that mean for the average person who's looking for insurance?
Well, it basically means you've got options. They're not just focusing on one thing.
Oh.
They offer a whole bunch of products.
Yeah.
Protection, savings, retirement solutions. And they're getting those products out there in every way you can think of. The traditional way with agents, online platforms, partnerships with banks, you name it.
That's a pretty smart strategy.
It is.
Cast a wide net, right?
Exactly.
But in this day and age, nobody wants to deal with a ton of paperwork.
Oh, I know.
Are they keeping up with the times on that front?
They totally are. They're actually leading the charge in the industry when it comes to going digital.
Really?
Yeah.
That's great.
Their report says they've got almost 85% digital KYC implementation. That means most new customers don't have to deal with any paper at all.
It's amazing.
Yeah.
No more forms getting lost in the mail?
Nope.
Okay, but what about when you need to actually use your insurance? How's their track record on that?
Well, this is where you can really see how they prioritize their customers.
Oh, okay.
Their claim settlement ratio is a whopping 99.3%.
Wow.
And for individual claims that don't need investigation, the average turnaround time is just 1.2 days. Yeah. They're using technology to really speed up the process, making sure people get paid quickly and without a hassle.
Wow, that's incredibly efficient.
It is.
It almost sounds like they've made insurance, dare I say, easy.
It really seems that way.
Yeah.
They've streamlined every single step,
Wow.
from signing up and managing your policy to processing claims.
Okay.
They even have a super highly rated mobile app that gives customers access to everything 24/7.
So less paperwork, faster payouts, a mobile app.
Yeah,
They're going all out to keep their customers happy.
they are.
But what about their financial stability as a company? How can I be sure my money is safe with them?
That's the most important question.
Right.
And the answer is a definite yes.
Okay, good.
Their solvency ratio, which basically measures their ability to pay their debts in the long run, is a strong 211.8%.
Okay.
That's way higher than the 150% required by regulations.
Right.
This shows they have a big cushion to absorb any potential losses.
Okay.
Plus, they're actively managing interest rate risk, which is really important in this economy.
So they're not just growing quickly, they're doing it responsibly, with a solid financial foundation.
Exactly.
Okay, before we move on to broader industry trends, I want to touch on those new products they launched in Q3 of 2024.
Yeah.
Their investor presentation mentioned a couple that really caught my eye.
Oh, yeah. Their product development is definitely worth a closer look.
Yeah.
One that really stands out is their health plan specifically for women.
Right.
Yeah.
It's the first of its kind in the industry, and it's really changing the game when it comes to meeting the unique healthcare needs of women.
Okay, tell me more about that. What makes it so unique?
This plan covers a whole range of women-specific critical illnesses and surgeries,
Okay.
things that are often overlooked in traditional plans.
Right.
And here's the best part. The premium stays the same throughout the entire coverage term,
Oh, wow.
which means you can really predict your costs, even as healthcare gets more expensive.
Wow, that's fantastic. Any other noteworthy launches?
They also introduced this really innovative increasing annuity option within their regular pay annuity products.
Okay.
It's another first for the industry.
Right. Another one.
Yeah. This option lets those annuity payouts increase over time.
Okay.
So retirees can keep up with inflation, which is a huge worry for people living on a fixed income.
That's really thoughtful. It seems like they're in tune with their customers' needs and how the financial world is changing.
Absolutely.
Yeah.
It's a good example of a bigger trend in the industry, moving towards more personalized products that fit different stages of life and specific needs.
Okay.
Like, they also have a new protection plan that offers 4 layers of financial security.
Oh, wow.
A lump sum for the nominee, income replacement for the family, a waiver of premiums,
Right.
and even a maturity value at the end of the term.
That's a pretty impressive safety net.
It is.
They're not just selling insurance, they're selling peace of mind.
Exactly.
Yeah. Okay, let's zoom out a bit now and talk about the bigger trends we're seeing in the Indian life insurance industry.
Oh.
From what I've gathered, it's on a major growth path,
It is.
driven by a rising middle class and more people realizing that they need to plan for their financial future.
Absolutely.
That makes sense, especially considering how their population is growing and changing.
Yeah.
But what are the specific areas we should be watching?
The retirement space is a huge opportunity,
Yeah.
especially with India's aging population and this big gap in retirement savings.
Right.
Things like annuities and pension plans are going to be really important for dealing with this.
Yeah.
And insurance companies are in a good position to help bridge that gap.
That makes perfect sense. There's a real need for these products, and it seems like companies like ICICI Prudential are stepping up.
They are.
But what about protection products like term insurance?
Yeah.
Is there room for growth there too?
Totally. Even though awareness about life insurance is going up,
Yeah.
the number of people actually buying those pure protection products is still pretty low in India.
Compared to other more developed countries.
Right, exactly.
So there's a big opportunity to help people understand how important it is to financially protect their families,
Definitely.
especially in a country where a lot of families rely on just one person's income.
Yeah.
So educating people about financial protection is key.
Mhm.
As more people get jobs and become financially stable, I'd imagine the demand for these products will go up.
It will.
But what about health insurance? We talked about their cool new plan for women, but what's the bigger picture like?
Well, that's another area with a lot of potential.
Okay.
But there are some challenges too. Right now, the health insurance market is mostly dominated by public and private general insurers.
Okay.
Life insurers have a smaller slice of the pie.
Right.
However, there's this growing realization that we need a more holistic approach to health insurance,
Okay.
something that's seamlessly integrated with life and financial planning.
That's a great point.
Yep.
Having all your financial needs met in one place makes total sense.
It does. And as regulations change, we might see life insurers playing a bigger role in the health insurance space.
Okay.
They're in a good position to offer those health riders and bundled products that really cater to specific needs,
Right.
adding even more value for their customers.
Okay, so lots of interesting stuff happening in the Indian life insurance industry.
For sure.
Now, I want to talk about something I saw in their investor presentation that caught my attention. This idea of embedded value.
Yeah.
It sounds like it's pretty important, but I'm not totally sure I understand what it is.
Embedded value, or EV, is a super interesting concept,
Okay.
especially for life insurance companies, because their business is all about the long term.
Yeah.
Basically, EV is like looking into the future and figuring out how much profit a company expects to make from its existing policies.
Okay.
You add that to the value of its adjusted net worth.
Got it.
It takes into account all those future premiums, investment income, expenses, and importantly, the risks involved in the business, like policies lapsing and people passing away.
Okay.
So it's kind of like a snapshot of the company's future earning potential, but adjusted for risk.
Okay, so EV helps investors figure out the real value of the company beyond just the profits they're making right now.
Exactly.
And how did ICICI Prudential do on the EV front?
They did really well.
Okay, good.
Their EV grew significantly from $356.34 billion at the end of March 2024
Okay.
to $423.37 billion at the end of December 2024.
Wow.
This was driven by new business, good investment performance, and careful management of how they're handling risks.
Okay.
They also highlighted something called their Embedded Value Operating Profit, or EVO.
EVOP.
Yeah.
Okay.
It basically measures how much their EV increased because of the things management can control.
So they're not just growing, they're also making sure that growth creates long-term value for their shareholders.
Exactly that.
It's all starting to make sense. The strong financial performance, the innovative products, that customer-centric approach.
It's all connected.
Yeah, and the focus on creating lasting value. Now I can see why investors are so excited about this company.
It's definitely a compelling story.
It is.
It seems like they're doing everything right.
All right, before we move on to part 2, where we take a deep dive into their financials, let's zoom out again and look at the big picture.
Okay.
We've talked about these key trends shaping the Indian life insurance industry. What's the one thing you think our listeners should be thinking about?
Well, I think the main takeaway is that the Indian life insurance market is set to grow like crazy in the coming years.
Really?
Yeah. This means there's no better time to really think about your financial goals
Okay.
and how life insurance can help you get there.
That's true.
Whether you're protecting your family,
Yeah.
saving for retirement,
Really?
or planning for future healthcare needs,
Yeah.
this changing landscape offers a ton of options and opportunities.
That's a really powerful message.
It is.
Knowledge is power, right?
Definitely.
And hopefully we've given our listeners a lot to think about today.
I think so.
But before we wrap up part 1, I want to leave you with one final thought.
Okay.
We've talked about ICICI Prudential's commitment to using technology to improve their customer experience and make things run smoother.
Yeah.
But what if we take that a step further?
Oh, okay. I like where this is going.
What if technology could actually allow us to personalize insurance to a level we've never seen before?
Wow.
Imagine policies that are constantly adjusting based on your specific needs,
Yeah.
your health, your lifestyle choices, your financial goals.
Uh-huh.
Almost like having a personal financial guardian angel.
That's a pretty amazing vision.
It is.
With all the advancements in artificial intelligence, machine learning, and data analytics,
Right.
that future might be closer than we think.
Now, that's something to think about.
It really is.
The possibilities are pretty exciting when you consider how technology could continue to change and reshape the insurance world.
They are.
We'll have to leave it there for part 1. Join us for part 2, where we'll really dig into their financial performance and break down all those numbers.
We'll be back soon with more data, more insights,
Okay.
and more fascinating discoveries. Stay tuned.
All right, see you then.
Welcome back to our deep dive into ICICI Prudential Life Insurance.
In part 1, we talked about their impressive profit growth, those cool new products they're launching, and we even got a glimpse into the future of personalized insurance.
Exciting stuff.
It is. Now let's get into the nitty-gritty of their financials.
Let's do it.
All right, I'm ready to crunch some numbers.
Okay. So their financial statements show a big jump in their net premium earned.
Okay.
It climbed by 14.4%. To reach a pretty substantial $321.19 billion
Okay.
in those 9 months leading up to December 2024.
That's a pretty healthy increase.
It is.
What's driving that growth in premium income? Is it all new business, or are existing policyholders contributing too?
It's a bit of both, actually. They're attracting new customers, but they're also seeing steady growth in renewal premiums from their existing policyholders.
Okay.
It's a good sign.
It is.
It means they have a healthy balance and a sustainable business model.
Right.
You can also see this in their total weighted received premium, or TWRP.
TWRP. Okay.
It basically measures the premiums they collect from both new and existing customers.
So TWRP is like a measure of how efficient they are at collecting premiums overall.
You got it.
Okay.
And their TWRP grew right alongside their total premium,
Okay.
showing they're managing those collections really well.
Right.
This also suggests they're keeping a close eye on persistency.
Persistency, okay.
Which is basically how many policyholders keep paying their premiums.
Gotcha.
And the report highlighted some pretty impressive persistency ratios.
Yeah, they did.
Their 13-month persistency ratio is a strong 89.8%.
Okay.
So that means almost 90% of the policies they issued a year ago are still active.
Wow.
People are still paying their premiums. This means lower lapse rates, more predictable income,
Right.
and a stronger financial foundation for the company.
Okay.
High persistency is a good thing for any insurance company.
Yeah, makes sense.
And ICICI Prudential is clearly doing a great job in this area.
Okay, now their report also mentioned that their total expenses, including commissions, went up by 18.5%. Should we be worried about that?
Well, it's normal for expenses to increase when a company is growing.
Right.
Think about it.
Yeah.
Selling new policies costs money up front.
Right.
Things like agent commissions and marketing.
Okay.
But we really need to look at their cost ratios to see how efficient they are overall.
Okay, so what do those cost ratios tell us? Anything interesting?
They do. Their overall cost ratio, which is basically total expenses divided by TWRP,
Right.
went up a little to 19.8%.
So a slight increase in expenses compared to their premium income.
Yeah, but it's still within a healthy range for the industry.
Okay.
And they actually break down their cost ratios by line of business, which gives us an even better understanding of how they're doing.
Interesting. What does that breakdown show us?
For their savings line of business,
Yeah.
which includes traditional savings plans and unit-linked products.
Right.
The cost ratio went up a bit to 16.8%,
Okay.
which suggests they're managing costs pretty well in that core segment.
Right.
But their protection business, which we know is growing a lot,
Yeah.
has a higher cost ratio, naturally.
Okay.
It's at 27.8%.
Okay.
This is because protection products, like term insurance,
Yeah.
usually have lower premiums,
Right.
but higher upfront costs for things like underwriting and assessing risk.
That makes sense.
Yeah.
So even though their overall expenses are up, it's mainly because of their growth and all the different products they offer.
Right.
It seems like they're doing a good job of keeping those costs under control.
Yeah, they are.
Great. Now let's talk about their investment performance. We touched on their investment income earlier, but I want to dig a little deeper into how they manage their investments.
Yeah.
And what their strategy looks like.
Okay.
Their investment strategy is super important to their profitability
It is.
and their ability to keep those long-term promises they make to policyholders.
Definitely.
Remember, they're not just an insurance company.
Right.
They're also a major institutional investor, managing billions of rupees in assets.
That's a big responsibility.
It is. So what does their investment portfolio look like, and how are they approaching that responsibility?
They are all about safety and stability.
Okay.
Their report says that a huge chunk of their fixed income investments,
Yeah.
like 95.8%,
Wow.
are in sovereign or AAA rated instruments.
Okay.
Those are considered very low risk.
So they're not gambling with their policyholders' money.
Nope.
They're choosing safe and stable investment.
Exactly.
Okay.
They're focused on protecting that capital and generating a steady income to meet their obligations,
Right.
rather than going after those risky, high-reward opportunities.
Yeah.
This approach makes sense, especially with how volatile the market is right now.
Absolutely. Are there any other strategies they're using to manage risk in their investment portfolio?
Yeah, they're also working on reducing interest rate risk,
Okay.
which is the risk that changes in interest rates will impact the value of their fixed income investments.
Right.
They're using things like derivatives to hedge their exposure.
Okay, so they're being proactive and taking steps to protect their investments from those market swings.
Exactly.
And they're not putting all their eggs in one basket.
Nope, their portfolio is well diversified.
Okay.
They've got a good mix of debt and equity investments.
Okay.
Their debt-to-equity ratio is 54.46, showing they're taking a balanced approach.
It sounds like they've got a really good handle on their investment strategy.
They do.
They're balancing safety, diversification,
Yeah.
and active risk management to make sure their investments stay healthy in the long run.
Absolutely.
This is a key factor in their overall financial strength
It is.
and their ability to deliver consistent value to both policyholders and shareholders. Okay, we've covered premium growth, expense management, and investment performance. What other key financial metrics should we be looking at to get a sense of their overall financial health?
Their solvency ratio is a big one.
Okay.
It basically measures their ability to meet their long-term obligations.
Right. We talked about that earlier.
Yeah, and theirs is currently sitting at a very healthy 211.8%, which is way above what's required.
Yeah.
This means they have a strong capital buffer to handle any potential losses and make sure they can pay claims when they need to.
That's definitely good to know. It sounds like they're well prepared to handle any financial challenges that might come up.
They are.
Okay, good.
Now, let's talk about profitability.
Right.
We already know their profit after tax jumped by an impressive 18.3%.
Right.
But there are other profitability metrics we should look at too.
Okay. Which ones are most important for understanding how profitable they are overall?
One key metric is their return on equity, or ROE.
ROE.
It measures how well they're using their shareholders' money to generate profits.
Got it.
Now, this specific report doesn't actually say what their ROE is,
Okay.
but we can get a good idea from their embedded value operating profit, or EVOP.
Right, right.
EVOP helps us see how profitable their core operations are
Okay.
by focusing on the things management can actually control.
Okay.
And their EVOP reached $50.17 billion for those 9 months.
Okay.
Which shows they're getting strong returns from their operations.
So they're not just growing, they're also generating good profits.
Yeah.
And making sure their shareholders benefit too. It's pretty impressive performance all around.
It is.
All these factors paint a really positive picture of their financial performance and their ability to keep growing sustainably over the long term.
Definitely.
Okay, so we've gotten a clear picture of their financial strengths.
Yep.
They're growing impressively,
They are.
managing their expenses well,
Mm-hmm.
and achieving solid profitability.
It's all good.
What's next on our agenda?
Well, now that we have a good grasp of their financials, let's shift gears and look at what drives ICICI Prudential from an operational standpoint.
Okay.
Specifically, how they're using technology to improve their operations and make the customer experience really smooth.
I love when companies use technology to make things easier and more efficient. What are some specific examples of how they're doing that?
Well, remember that impressive 85% digital KYC implementation we talked about earlier?
Yeah.
They're using a bunch of digital tools.
Okay.
And pulling data from external sources to make the whole onboarding experience paperless for most customers.
Oh.
They've got Aadhaar-based eKYC, bank pre-population of forms.
Okay.
And they're even integrating with platforms like EPFO, Vahan, and GST.
Wow.
To verify income and other necessary information.
So they're really using India's digital infrastructure to make the whole onboarding process super smooth.
Exactly.
That's pretty incredible.
It is.
And they're doing it really quickly, too.
Yeah, they can now issue almost half of their savings policies on the same day a customer applies.
That's amazing. I can see why their customers are so happy. Who wouldn't love such a quick and easy experience?
It's a game changer.
It is.
But their tech skills go way beyond just onboarding.
Oh, okay.
They've also completely changed their claims process.
Right.
They're using AI to do pre-claim assessments.
Okay.
To speed things up.
Right.
And they even guarantee same-day claim settlement for certain cases.
Wow. No more waiting weeks or months for a claim to be processed.
Nope.
They're really setting a new standard for the whole industry.
They are.
And their 99.8% claim settlement ratio shows just how committed they are to making that claims experience smooth and efficient.
For sure.
It seems like they're using technology to make every part of the customer journey better. But what about ongoing customer support? Beyond just onboarding and claims, how are they using tech to help their policyholders on a daily basis?
They've got a multi-channel approach to customer service, offering support in a bunch of different ways.
Okay.
Their mobile app, which is highly rated, lets customers manage their policies, make payments, and track their claims all in one place.
Right.
They've also got 247 support through chatbots, WhatsApp, and even a visual IVR system.
That's awesome. They're meeting customers wherever they are and giving them a bunch of different ways to get in touch and get help.
Exactly.
And they're not just offering different channels.
Right.
They're using AI and machine learning to personalize those interactions.
Giving tailored recommendations and solutions based on each customer's needs and preferences.
So they're not just digitizing, they're personalizing.
Exactly.
That's a big deal these days.
It is.
People expect that personalized experience.
They do.
And their use of technology goes even deeper. They're using analytics to make smarter business decisions.
Oh, yeah.
Like identifying growth opportunities, managing risk, and even predicting customer behavior.
It's powerful stuff.
That's fascinating. Can you give me a specific example of how they're using analytics to improve their business?
Sure. They've built some really sophisticated models to predict customer lapse rates,
Okay.
which means they can figure out which policyholders might be thinking of letting their policies lapse,
Right.
and then take steps to keep them.
Okay.
It's a smart strategy
Yeah.
because keeping your existing customers is much cheaper than finding new ones.
That's a great point. Are there any other ways they're using data to make their operations better?
Yeah, they're also using analytics to optimize their marketing campaigns,
Okay.
tailor product recommendations, and even spot potential fraud risks.
So they're really embracing data to make things more efficient, innovative, and ultimately to create more value for their customers.
Exactly.
They're definitely leading the way when it comes to using technology to enhance their business.
They are.
But we can't forget that insurance is, at its heart, a people business. How are they making sure they don't lose sight of that human element with all this technology?
Well, you're absolutely right.
Yeah.
Technology is great, but human connection is still really important in insurance.
Yeah.
And ICICI Prudential knows that they have invested a lot in their employees.
Okay.
Created a supportive work environment,
Right.
focused on employee development,
Okay.
and really emphasized employee engagement.
And their report highlights their impressive employee retention rates and high scores on those employee satisfaction surveys, so it seems to be working.
Yeah, they built a culture of excellence and empowerment,
Okay.
and that ultimately leads to a better experience for their customers.
It's amazing how all these things work together to create a successful and sustainable business.
It is.
We've covered a lot in this deep dive,
We have.
looking at their financials, their vision, their innovative products,
Mhm.
and their incredible use of technology.
It's been a journey.
It has.
We even touch on how they treat their employees and how they focus on a positive work environment. It's clear that ICICI Prudential is firing on all cylinders.
It is. We've gone way beyond just the headlines
We have.
and uncovered some really fascinating insights.
For sure.
But before we move on to part 3, where we'll explore those bigger industry trends and what they mean for you,
Yeah.
I want to stop for a second and bring it back to our listener.
Okay.
What's the one thing you think they should remember about ICICI Prudential Life Insurance?
What stands out most to you?
Well, for me, I think the biggest takeaway is that this is a company that's not afraid to embrace the future.
I agree.
They're always innovating, pushing boundaries,
Yeah.
and using technology to create a better experience for their customers and to build a more sustainable business for the long haul.
They're not just keeping up, they're setting the pace
They are.
for the whole industry.
Exactly. That's a really admirable quality in any company,
It is.
but especially in an industry that's often seen as traditional and slow to change.
Right.
So they're a company to watch, not just for those interested in insurance,
Yeah.
but for anyone who wants to understand how technology and innovation are changing the business world.
Absolutely. They're a great example of how to succeed in a world that's constantly evolving.
All right, let's take a step back now
Okay.
and explore those larger trends shaping the Indian life insurance industry
Sounds good.
and how they might impact your financial future.
Let's do it.
Welcome back to the final part of our deep dive into ICICI Prudential Life Insurance.
We've seen how well they're doing financially,
Right.
learned about their focus on their customers,
Yeah.
and even witnessed how they're using technology to completely change the insurance experience.
Okay, so now it's time to zoom out a bit and look at the bigger picture.
Okay.
What are the trends shaping the entire Indian life insurance industry?
All right.
And how could those trends affect our listeners' financial future?
Well, the Indian life insurance industry is going through some pretty big changes right now.
Okay.
It's growing and transforming in a remarkable way.
Wow.
There are a few key trends driving this.
Okay.
And if we understand these trends, we can all make better decisions about our money and our future.
Okay, I'm ready. What are some of the biggest trends you're seeing?
One of the most noticeable ones is this rising awareness of financial planning
Yeah.
and the demand for it across India.
Yeah.
People are starting to realize how important it is to secure their financial future.
Yeah, that makes sense.
And this is leading to a growing demand for life insurance products.
As people get smarter about their finances, it's natural for them to look for ways to protect what they've earned and build a stable future for themselves and their families.
Exactly.
Right.
And this trend is being fueled even more by a rapidly expanding middle class and a workforce that's young and growing.
Right.
This shift in demographics means there's a much bigger group of potential customers out there.
Right.
People who are ready and willing to invest in their financial well-being.
So the market's growing, And customers are becoming more savvy. What does that mean for the products and services insurance companies offer?
It's pushing the industry to come up with new ideas.
Okay.
Companies are responding to these changing needs.
Yeah.
They're creating new and innovative products that fit into specific life stages and financial goals.
We already talked about how ICICI Prudential is kind of leading the way here
They are.
with their new health plan for women and that increase